Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only two kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan, not changing it because you're having an emotional meltdown. Thank you so much for turning up again, and here we are for another video of totally packed value. In this video, I'm going to be teaching you 5 things that will make you a consistent trader, and that's an absolute guarantee. If you do these 5 things, you will be a consistent trader. In the last video, I showed you how to build a trading strategy from scratch. In this video, I'll give you 5 things that are guaranteed to make you a consistent trader. So I'm going to keep saying that. That's because every time I come across a trader or I work with someone, the biggest thing that they want to be able to achieve is consistency. It wasn't even easy for me. I am a consistent trader, as you can see from everything I do, and that goes from how I trade, option premium, every week for income, in some cases on 45 DT calendars. Build your trading career with the Fivers, where opportunity meets quality prop trading. The Fivers is one of the oldest prop firms in the business, with over 9 years of experience funding traders. Join a select group of top traders and access funding up to $4 million, empowering you to trade with confidence and scale your trading business. Experience exceptional trading conditions with low commissions, tight spreads, and the freedom to hold positions overnight or over weekends. Accelerate your trading journey with their hyper-growth program, doubling your account size at every milestone, propelling you towards your financial goals. Join a vibrant community of successful traders. More traders have succeeded in keeping their Fivers funded account than any other prop firm. Benefit from their reliable payout policy, receiving profits with the click of a button, ensuring you reap the rewards of your trading prowess. Unlock trading capital with sensible rules by joining the Fivers. Sign up using the link in the description below. This supports the channel and our sponsors. Do it now. 2. Trading CFDs, the futures market, and achieving consistency. This is something that I've done for the past couple of years. Now, I'm a full-time trader. I don't have anything else that I do. This is what I do pretty much for a living. So a lot of you out there, I know you'd want to be traders for a living. I'm not professing to be a millionaire trader. This is not what I am. I think my trading pays me a wage like everybody else. So I'll be incredibly lucky if I can make 150 grand a year from trading, right? But I make a decent enough amount of money that I can feel comfortable, I can travel around the world, and I can enjoy my life the way I want to enjoy my life. For those of you who've been following me for a number of years, you know that I've traveled around the world a little bit. At the moment, I'm currently in South America. I do enjoy going between England and the rest of the world. England is a really dreary country. It can get really cold and miserable. So it's kind of not the place you'd want to be unless you have to be there. So I do like to get about, enjoy other things, enjoy the sunshine, and not to say that that's the life you're going to want. Maybe you're not going to want that, but I'm pretty sure that a lot of traders want to be financially free, right? And that's all it is. That's why you come to this, is to be able to pay yourself a wage so you're not dependent on someone else to do that. For some people, it will always be a dream in their mind. For some people, they have the desire to make it a reality. And those are the people I'm trying to talk to. I'm trying to give all this information to help. Moving on to the video. Number 1, understand the probability of ruin matrix. Now, what's the probability of ruin matrix? Well, it's actually really simple. You've got somewhat of an X and a Y axis, right? For those of you who don't remember your maths, not a problem. It should be on the screen. So you've got an X and a Y axis. On the X axis, you've got the percentage probability of 100 trades. So essentially, are you 20% correct, 50% correct on your trades? On the y-axis, you've got risk to reward ratio, a huge topic of contention, right? But understanding this is really important because most traders desire to be on what we call the top left of the quadrant. Well, that is pretty much where a lot of traders are going to end up. Why? What bull? I say they desire to be there because it's where they make all the mistakes, right? It's why they follow all the herd influence. It's why they do all of these other crazy things. It's because everyone is trying to get to that top left of the quadrant, which essentially spells failure.
Well, if your goal is a long life, that chili cheeseburger is a step in the wrong direction.
Why is that? It's because on the top left of the quadrant, 10% of your trades might be correct, but your risk reward ratio might be something like 1:5. Well, that's not really realistic. It's very difficult to get a 1:5 in today's marketplace, right? And if you've got 10% of your trades correct, can you actually call that a strategy? I mean, it's like a coin toss, right? It's, 50-50 is a coin toss. 10%, that's not even a bet. That's something else entirely. So we're not trying to do that. We're not trying to get 10% of our trades correct to get 1:5 risk reward ratio. That's not what we're trying to do. So the probability of ruin matrix helps you understand where you need to sit on the quadrant. Typically, the best place to sit on the quadrant is somewhere between a coin toss, which is 50% probability to 60% probability, with somewhat like 1.5 to 1:2 risk reward ratio. Pretty difficult to do. Now, if you ask me personally where I sit on that quadrant, well, when I sell option premium, 89% of my trades are going to be right because it's selling option premium. Again, on a risk reward basis, well, when you calculate how that works, it's somewhat of a 1-to-1 if I sell a weekly option, or if I'm selling a 45 DTA, it's more like 1-to-0.5, because that's just how option premiums work. I collect the premium cash. So essentially, if I think about the risk that I put up to do that, that's the entire value of the stock. It's an undefined risk strategy, but it has a high probability. So effectively, you might lose one trade that might wipe out 2 or 3 of your gains, but in reality, with an 89-90% accuracy rate, you're probably going to make that up. And just to put that into perspective, I've got a couple of other videos on YouTube that illustrate that, but to put it into perspective, typically I'd make 60% to 80% return on capital annually. That is pretty decent, right? So selling premium is a completely different story, right? So the probabilities work out differently. But if you're trading generally, I would say that you somewhat want to sit between sort of 30 to 45% of your trades correct, but you definitely need to have a bigger risk reward ratio. So it needs to be about 1:3. Now, this is not achievable on all asset classes, right? So you can't get that on all asset classes. So you want to focus on the asset classes that trend. Now, I did a video on this, which is my last video. So if you go and watch that, you'll understand how we identify trending assets versus assets that are going to go sideways. So in other words, assets that won't give you that kind of risk reward. So number 1, understand the point probability of ruin matrix. Number 2, reduce friction in your trading. Most traders don't understand that the more information you got to take in, the more friction there is to your trading, and the harder it is for you to make trading decisions at least accurately. And that's where people come up with the conversations that involve, oh, I need a system, like I need a bot to trade for me, or I need some kind of automated trading strategy, because they can't rely on themselves to make the same decisions all the time. So they're going to need something to kind of help with that, so that it can be a bit more consistent, because they're plugging in too much stuff. There are too many indicators, there are too many trading tools. They're trying to look at the dome, they're trying to look at candlesticks, they're trying to look at market profile, they're trying to look at a lot of things at once. That is definitely not what I want to advocate. If you're an intraday trader, you have to be executing within the day frame. So if you're executing within the day frame, you have to be quick and you have to be fast. If you're not that, if you want to overlay a lot of things and create a lot of friction, then you can't be an intraday trader. That would be really, really difficult. So you want to grind it down to some really simple moving parts, even if you know a hell of a lot of stuff. For example, if I'm intraday trading, I will look at the time and sales, which gives me an idea of the contracts coming in. Then I'll also look at the actual price action, right? So I'll be looking for pattern recognition, and I explained that in my last video. So once again, if you haven't seen that, watch it. So it's pattern recognition, and then I'll be looking at the time and sales window. If I want to develop a bias for whatever reason, I've got my market profile charts to be able to tell me that. But typically, it makes sense to reduce the friction. You don't want to have a lot of things to look at, and you definitely don't want to tie in a lot of analysis. If you're an intraday trader, it's unlikely the bigger picture is going to affect you that much, right? It depends, because again, if you're an intraday trader, then you're going to be trading a really small time frame. And if you're doing that, you're looking to catch, maybe for example in gold, you might be looking to catch a 6 or 7 point move. Honestly speaking, that's nothing in the weekly run of gold or in the daily run of gold. It's absolutely nothing. So in my opinion, don't think that you're going to need to understand anything on the longer time frame, right? Because you're pretty much in the micro world of trade. The third thing is understand how volatility affects your profit potential, right? So this goes back to picking a trending asset. For example, if I'm going to intraday trade and I want those 1:3 risk rewards, I'll stick to something like the S&P 500 or gold. I certainly won't be trading an FX pair to achieve this, or I certainly won't be trading an FX pair that goes sideways, like for example the dollar Swiss, or any other kind of FX pair that is likely to range. So we've got to be particular about the assets we trade, right? Because again, if you're trading something like crude oil, or you're trading something like currencies, and you're trying to achieve a consistent 3-to-1 risk reward ratio, that's probably not going to happen. But again, inflation hedges like gold, the S&P 500, the Dow Jones Industrial Average, and effectively even the Nasdaq can potentially give you that, right? It can give you a 1:3. Again, it depends on your time frame. You're not going to be able to achieve this if you're trading a 1 hour time frame. These things are very cyclical in nature. They've got underlying options, so it's not going to be able to do that. Of course, it might end up doing it in the long term if you're willing to hold a trade overnight, but you're not. You're an intraday trader. So again, if you want to keep intraday trading and you want to be able to achieve really good profit potentials, then you need to be able to understand how the volatility of an asset class affects that profit potential. So for example, the dollar inflates at approximately 10 to 12% annually. Let's, for argument's sake, let's say it inflates roughly about 12% annually, right? And factoring in the COVID years, right? That's approximately 1% a month. Now, a lot of the inflation hedges will be double the depreciation of the dollar, which is 10 to 12% a year. So you can expect that your gold asset class is going to give you approximately, in terms of implied volatility, it's going to be about 24% a year, right? So in effect, it's going to be about double. So it's a really good trending asset that hedges inflation. In contrast, let's take cable. That's going to be 6 to 7% implied volatility over the year, because what I'm trying to say is that these are the asset classes being devalued. So at the end of the day, they're not really going to be that volatile. You're going to need lots of leverage to trade them, and that's where you're going to kind of get burned out. So again, stick to the assets that are highly volatile. So if you look at commodities like gold and the S&P 500, they've got pretty decent implied volatility. Point number 4, learn to identify trending assets from sideways assets. I've got a video on that, so I won't go too much into detail, but again, talking about the implied volatility, once you understand that, you can then see an asset and pick one out that's trending. Again, I made a really good example. Gold will be that asset that is very trending, or you could potentially move on to pick something like the S&P, so an index. Keep your trading strategy very simple before you start optimizing. This is not talked about enough. You want to be able to keep your trading strategy very, very, very simple. If you can't do that, you've got a problem. You've got a massive problem, because you need to be able to see and act very quickly. If the trading strategy is too complex, it's a problem. Secondly, optimizing. People are in a hurry to optimize their strategies. Sometimes the strategy doesn't need optimizing, right? Or if it needs optimizing, we're talking about one or two things. I'll give you a really good example. Take, for example, this picture of gold that we're looking at right now. I might want to optimize. I might be looking at this is a 1 hour chart, okay? I might be looking at basic pattern recognition, and I might say to myself that I want to get long on gold. Well, I might be optimizing using, for example, volume. So you can see there's a high amount of volume that was trading yesterday in the NASDAQ open, and I might say that, okay, this is a decent amount of volume and this is likely to push gold higher, right? If that's the case, then I've got a bias, I've got a long bias, and I can use that to optimize my intraday trading strategy. So if I was to pop in to a very tight intraday time frame, which is the absolute smallest time frame, which is a 1 minute chart, then at the London Open, I could consider long positions that are likely to trend upwards. They're going to give me that classic risk reward. And if we look at that and we're just looking at some basic pattern recognition, got long at the highs, covered your risk here, and then you look at the extension on the London Open, I mean, top to bottom, it was a 9.1, that's a 5 risk reward. Now, typically you're not going to get that all the time, so we've got to average this stuff. So I optimize that. A 3-to-1 is reasonable for an asset class like gold, and more than achievable on a day-to-day basis, which is what you want to say. If it's not achievable on some days and achievable on others, it's a bit of a problem, right? You want it to be consistently achievable through the day in any major session open, right? That could be London, that could be Chicago, that could be the NASDAQ, whatever it is you're trading, you want to be able to see that. It should even be possible in the Asia Open, and believe you me, if it's possible in the Asia Open, then you've got a fantastic picker. Hopefully that example made sense. Now, something again that is really, really, really important is, this is a bonus more than anything else, is you want to be able to learn how to trade options, right? 100%, because what are options? Options are something that express risk, right? Because these options have premiums, and that people pay these premiums to attach the risk element to their positions. They're expressing their risk. Any movement in these options is going to affect the asset class 100%, right? Because people are buying these premiums either because they think the asset class is going to go down, or they're hedging against something if the asset class is going to go up. So having a good understanding of the options landscape will definitely give you a little bit more of an edge in your trading. Okay, so these are my 5 things that I think you should pay attention to if you're going to end up as a consistent trader. So the first is understand your probability of win matrix. Second, reduce friction in your trading. Third, understand how volatility affects profit potential. 4, learn how to identify trending assets and assets that move sideways. It's going to be critical to your survival. Keep your trading strategy very simple before you start optimizing it. Again, if you are going to optimize it, make it small optimizations. Like, for example, add a bit of volume overlay, maybe look at the time and sales window. 2 things, good optimization. It should help you with getting the accuracy up a little bit more, rather than it being a complete coin toss where it's just random. Hopefully you guys enjoyed the video. This was an amazing value for you. If you have, well, you know what to do. Just like and subscribe, support the channel. For us here, it's all about making trading real, making it accessible for you so you realize that you can do this for a living. I'm grateful that you guys are joining me on my journey, which has been over 15 years. I've mentored tons of people into the ability to be able to trade full time. So if this is something you want to do, or you're something interested in, then this is definitely the channel for you, so you don't want to not subscribe. Right, I put out videos every week, so there's a lot of content here for you to digest, and everything you need if you want to become a full-time trader. Till the next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?